$400,000. Locked inside an apartment you are not allowed to sell for 3 years, in a currency that can move against you the whole time you wait, and even then it will not lower your taxes by a single dollar. That is the trap hiding inside the Turkish passport pitch, and almost every investor I meet walks straight into it. There. I said it in the first 10 seconds. Because a passport quietly fixing your tax bill is the single most expensive misunderstanding I watch foreign investors make. Here is how it usually starts. Someone slides a glossy brochure across the table. A beautiful apartment with a sea view in Istanbul. A second passport in as little as 4 to 6 months. Visa-free or visa-on-arrival travel to well over 100 destinations. And somewhere on that slide, in a smaller font, sits the promise that quietly rewires your brain. Buy this, and your tax problem disappears. And before we go a single step further, 2 of those numbers deserve an honest asterisk. Processing timelines and visa-free counts both drift every year. Programs speed up, slow down, add and lose destinations. So treat the 4 to 6 months and the 100+ destinations as directional and reconfirm the current figures before you build a plan around either one. I will hold everything in this video to that same standard. It does not fix the tax. And the people who learn that the hard way almost always learn it the same way. A letter arrives from a tax authority that never left. A bank freezes an account because a source of funds question was never really answered. An application that looked approved bounces back over a single missing certificate. And suddenly the $400,000 they were told was, and I am quoting the brochure here, guaranteed, is locked inside a property they cannot sell for 3 years, in a currency that moved against them while they waited. That is the gap between the pitch and the file. The pitch sells you a passport. The file is a stack of rules, appraisals, bank receipts, and deadlines that decides whether that passport ever arrives and whether it does anything for your money once it does. So let me be blunt, because being blunt is the whole point of this channel. It is not your passport, it is your structure. A citizenship is a door. What you build on the other side of it, where you actually live, how your business is really run, how your money is held and reported, that is what decides your tax and your legal exposure. Never the card on its own. If this is your first time here, Imberg Tuzel. Over the last 8 years, I have sat inside the cross-border planning of many entrepreneurs and investors, and I have seen where these programs quietly go wrong. I am also the founder of Corpenza. Today I am going to give you the real file on Turkish citizenship by investment through real estate. 3 things specifically. First, the actual requirements the sales deck glosses over as rules, not as a wish list. Second, the traps that live inside those requirements, the appraisal, the currency certificate, the 3-year lock. And third, near the end, who this program is genuinely not for, because that one honest paragraph is going to save some of you a very large amount of money. Stay to the finish, because the most important sentence in this video is the last rule, not the first. Let me start with why Turkey is even on the table, and why now. By most independent rankings of these programs, the kind of advisory league tables and passport indices that firms and analysts publish every year, Turkey sits among the fastest citizenship by investment routes in the world that still lead to a full passport rather than only a residence card. Treat that ranking the way you should treat every ranking. Pull up the current list and check it yourself, because these tables get revised, but the direction has been consistent for years, and it is exactly why the program keeps drawing serious international money to a genuinely attractive destination. Here's the part I want you to actually feel though. Windows like this do not stay open at the same price forever. The investor who moved on Dubai 15 years ago or on Georgia 10 years ago was not smarter than everyone else. They were earlier. The programs that are fast and relatively affordable today are precisely the ones that tend to get more expensive, more crowded, and more conditional tomorrow. Look at the pattern inside this one program. The property option was opened at $250,000 back in 2018. Then, in 2022, the government raised the real estate threshold to $400,000, and it has stayed there since. The door was cheaper before it got popular, and the number moved once it did. Mark that number in your mind, but also mark this. Thresholds in this program have moved before, and they can move again, so treat any figure you hear, including mine, as something to reconfirm on the day you act. I will flag it clearly. The current real estate minimum is $400,000. Please verify that against the official rule before you transfer a single dollar. Now the requirements, not the brochure version, the file version. Rule 1. The real estate threshold is not a price tag. It is an appraisal. This is the first place the pitch and the file split apart. You do not qualify because you paid $400,000. You qualify because a government-authorized valuation company issues an official appraisal report that confirms the property is worth at least the threshold. And here is the part almost nobody explains on the sales call. That appraisal is expressed in Turkish lira. The dollar figure is then calculated from that lira value using the central bank's exchange rate on the day of the transaction. Sit with that for a second, because it is the trap that catches serious money. You are buying a lira-denominated asset, valued in lira, converted to dollars at an official rate you do not control. If the appraisal comes in below the threshold, and appraisals frequently come in below an inflated sticker price, your file is short, even though your bank statement says you paid enough. People buy at a headline number, then discover the independent valuation is lower, and now they are scrambling to top up or add a second property, which you are allowed to do. Multiple properties can be combined to reach the threshold, but the number that counts is the appraisal in lira at the official rate, not the price the developer put on the glossy page. Rule 2. The 3-year hold is a real lock, and it is written onto the deed. When you use a property for citizenship, a formal annotation is placed on the title stating that it cannot be sold for 3 years. This is not a gentleman's agreement. It is a legal restriction attached to the property itself. For 3 years, your $400,000 is not liquid. You cannot flip it if the market turns. You cannot pull it out if your plans change. You are a long-term holder, whether you feel like one or not. If that money needs to be available to you inside 3 years, this is already the wrong program, and we have not even reached the hard part. That raises the obvious question, and I want you to hold it in your mind. What happens if the bank says no? Keep that one. I will come back to it. Rule 3. The money has to move the right way through the Turkish banking system, and it has to leave a paper trail the state will accept. This is where quiet applications die. Your funds are expected to enter through a Turkish bank. The foreign currency you bring in has to be converted, and you obtain a foreign currency purchase certificate, proof in the state's own paperwork that the currency was sold and converted at the recognized rate. The payment for the property must run through the banking system so that there is an official receipt tying your money to that specific purchase. Cash under the table, informal transfers, a friend paying on your behalf, these do not build a file, they break one. And underneath all of it sits the source of funds question, which is really a compliance question. Before a bank lets your money in, it wants to know where it came from. If you cannot cleanly document the origin of $400,000, the elegant apartment and the fast timeline become irrelevant, because the account never opens and the certificate never issues. This is the honest answer to the question I asked you to hold. What happens if the bank says no? Everything stops. Not the government, not the land registry. The bank is the real gate, and it is the one the brochure never mentions. Rule 4. There is an official compliance step, and then there is citizenship. Once the purchase, the appraisal, and the annotation are in place, the relevant ministry issues a certificate of conformity, confirming your investment meets the rules, and that certificate is what feeds into the citizenship application itself. Get the family scope right here, because this is genuinely generous. The main applicant, the spouse, and children under the age of 18 are all included. That is real, and it is one of the honest strengths of this route. A whole family secured through one qualifying investment. So that is the file. Appraisal in lira, not a sticker price. A 3-year legal lock on the deed. Money through the banking system with a currency certificate and a clean source of funds. A certificate of conformity that turns the purchase into an application. Get those right and the passport is fast and real. Now the part the sales deck will never show you. Here is the honest warning, and it is the reason I opened the way I did. This passport does not, by itself, change your tax life. Turkish citizenship does not automatically make you a Turkish tax resident, and tax residence in Turkey or anywhere else is something you take on deliberately based on where you actually live, not something a passport switches on by itself. Tax residence is driven by where you spend your time, by where your economic center of life sits, in most systems by a physical presence test measured in days across a year. A passport in a drawer moves none of that. If you keep living where you live and running your business the way you run it, your tax bill is decided by that reality, not by a new travel document. This is the core idea I want you to carry out of this video. A tax outcome is a structure. It is your residence plus real substance plus a correct legal and corporate setup that matches where value is actually created. The passport can be one supporting piece of that structure, a piece of optionality, a door you may one day choose to walk through. It is never the engine. Anyone selling a second passport as a tax cure is selling you the door and calling it the house. So let me tell you plainly who this program is not for, because I would rather lose your click than waste your money. It is not for the person who needs their capital liquid in the next 3 years. The deed is locked. It is not for the person whose only goal is to erase a tax bill at home while continuing to live there. The passport does not do that. Your structure would have to, and that is a different, more serious conversation. It is not for the person who cannot cleanly and calmly document where their money came from. The bank will end the story before it starts. And it is not for the person who wants a guaranteed appreciating investment. You are buying a lira-denominated asset for a citizenship outcome on a 3-year lock. Treat it as the price of the passport and the optionality it buys, not as a property play that will definitely make you richer. Who is it for? The investor who genuinely wants a fast, family-inclusive second citizenship, who values a real plan B, who can hold the asset for 3 years without stress, and, this is the crucial part, who then builds the actual structure, residence, substance, the right companies around that new option instead of expecting the passport to do the work by itself. Here's what I would recommend. Separate the two decisions in your head completely. Decision 1, do I want this citizenship? For the mobility, the optionality, the family security. That is a clean yes or no. Decision 2, an entirely different question. What do I want my tax and corporate structure to be, and where do I actually need to live and operate for that to be true? Solve the second one properly, and the passport becomes a powerful piece on the board. Confuse the two, and you will spend $400,000 buying a feeling. At Corpenza, we handle exactly this kind of file, the full picture and not just the brochure, the citizenship route itself, and the residence, company and tax structure that has to sit underneath it for the whole thing to actually work. If you want to think this through properly, go to Corpenza and start there, or leave your question in the comments and I will read them. General information here, of course, not personal advice, and the figures can change, so always reconfirm the current rules before you act. Remember the one line if you remember nothing else. It is not your passport, it is your structure. That's it for this one. I hope to see you in other videos. Take care.